Good morning, Paul Georgie from Allendale. It's August 16th, Thursday morning, and we just got the weekly export sales here. Corn 253. The trade was looking for 350 to 550. Soybeans came in at 1.028. That's higher than what the trade was looking for at 750 to 950. And wheat 396, below the range at 450 to 550. So still very slow export sales for corn and wheat, and soybeans expected to see this level. And there's also talk yesterday that China could have bought another 2 to 4, possibly 6 cargoes of soybeans out of the U.S. So that's what's supporting the soybean market yesterday. This morning, we got this line of storms that's moving across Iowa and across Illinois as we speak, and should give the beans benefit drink here that will help increase the production on soybeans here, especially in the northern part of the Corn Belt. Other news, China definitely is slowing. More economic data and comments coming out of China that their economy is slowing down. The big question now is, will the government infuse some money and create some incentives to improve that economy? The concern there is if they pour money into it, that it creates inflation, and that's what's causing part of the problem already. So they're in a catch-22 situation there, and they're doing a lot of talking. The trade and the investment community is waiting for some action to be seen. Europe, kind of the same story there. We're getting a lot of talk that they will be wanting to do some infusing of money into the system, but proof is waiting to be seen. Some action that they actually are going to take some steps there to support that economy. The other news out of the EU is Greece is getting some talk again, where they're just not meeting the goals that were set as far as their debt reduction and the promises that they've made in getting their budget in line. So that appears that if the EU is going to continue to have Greece in their group, they're going to need to pour some more money into that system as well. And that's going to be talked about here more and more, and headlines will be hitting the news here over the next several weeks. Other news out of Europe, some ag analyst groups out of Europe are downgrading the production of corn in Europe. They're also saying that Russia has only enough grain to export for the next couple of months. The real question there is, if they are tight on exports, their prices are still $50 a ton cheaper than U.S. wheat. So the price of Russian wheat is certainly not slowing down any demand out of their area. So another area that we need to watch very closely. Here in the U.S., we've got yield reports coming in. We've got Georgia and across the Delta area, yields are quite good, better than what they were thinking. And that in turn is causing some pressure on the Gulf or CIF basis for corn coming out of the Midwest here down to the Mississippi. The basis there actually was up slightly yesterday, but still well below week ago levels. Soybean basis was higher yesterday, giving some indication that maybe there was some export business done to China. So that's a focus here on the cash market. We're also seeing cash bids in the domestic market here at processors very strong, because their margins are positive with the strength in the meal. They've got an incentive to pay up for soybeans, and with current prices and the drought situation, farmers have got their bin doors closed at this point in time. The demand side of things, we're not getting any curbing in demand from the poultry industry. The broilers and chick placements showed equal to a year ago. Now remember, a year ago from from the previous year, we had a 4% reduction. So we have seen some decline, but since that time, they're holding pretty steady on placements, which means that their demand is going to be steady here for the next several months. The livestock markets, cutout values in the beef continue to strengthen. Choice was up 131, Select up 140 yesterday. Pork cutout, however, were lower, and the belief there is that we're just seeing some increase in hog numbers come to market. And last week we ran, or so far this week, we're 75,000 head above last week's level. So expect to see some more pressure in the pork complex as high corn prices are driving pork producers to move hogs faster and to liquidate some of that breeding herd that they were expected to hold back. So those are facts that we're looking at here this morning. There's a lot more detail that we've got available on the Allendale Advisory Report. You can get that. Just go to our website and sign up for it and become a subscriber. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.